A lot of countries are poor and some are rich, and it's not about where they are or their size or anything like that. It's something else entirely. But why? Why do some countries have tons of money and others barely enough to scrape by? Well, there are a few reasons, but in this video, we're going to explain how countries get rich. Some countries have lots of money because they earn more than they spend. If any country spends more money than it makes, it'll be in debt, but if it earns more than it spends, it can save that extra money, invest it in the country and grow even richer over time. Now, there are different ways that countries can earn more money, so let's take a look at them. First off, there's what we call trading up. Basically, when one country buys something from another, it pays for it by taking currency from its own country and giving the other country's currency to its people. That means the first country is spending its own money, but the second country now has more money than it did before. This happens with every transaction, whether it's a person buying a TV or a company selling oil. Every time somebody spends money, some other country earns that money, so the more transactions that happen, the more countries make money. That's why countries that are open to international trade usually have stronger economies than those that aren't. The world economy is worth about $85 trillion, and if you could split that evenly among all the countries in the world, every single one would have around $970 billion, which is more than all but the richest countries have right now. But since trade isn't equal between countries, most countries don't get anywhere near that much. For example, the US and China are the biggest economies in the world, both worth around $10 trillion. That means together they're worth nearly half of the entire world economy. Now, the US trades with a bunch of countries, including China, so while they are competitors economically, they also help each other out a lot. When the US buys stuff from China, it helps China's economy grow, and when China buys stuff from the US, it helps America's economy grow. But there's a catch: both countries want to buy as much stuff from each other as possible while selling as little stuff to each other as possible. In other words, they want to earn as much money as possible from each other without giving too much of their own money away. Now, to make more money from trading with each other, each country needs to find ways to make their products more competitive. And that often means investing in research and development so that they can produce better products, and when they do that, they create new technologies and industries, which makes them even richer. Take, for example, solar panels. Solar power is becoming more and more popular, so many companies are investing in research and development to make better and cheaper solar panels. The companies that make the best and cheapest solar panels will earn lots of money. But these innovations don't just benefit the companies that make them, they benefit everyone. After all, no matter who makes your solar panels, you'll still be able to use them to generate clean energy. This is why investing in research and development is so important for growing a country's economy. It's the key to creating new industries and technologies that can make a country richer and its citizens happier. Now, innovation isn't the only way countries can earn money. They can also earn money by making their existing industries more efficient. For example, a country could invest in new equipment and technology to make farming more productive, or it could improve its transportation infrastructure to make it easier and cheaper to move goods to market. These investments don't directly generate new industries or technologies, but they can free up resources that can be used to create them. Take, for example, the Panama Canal. The canal was built to connect the Atlantic and Pacific Oceans, making it easier and cheaper to ship goods between the two coasts. This investment had a huge impact on the economies of countries around the world, including the United States and China. Before the canal was built, it was much more expensive to ship goods between the two oceans. This made it less profitable to trade with countries on the other side of the continent. But once the canal was open, it became much cheaper to ship goods long distance. This made it more profitable to trade with countries on the other side of the continent. As a result, the US and China became major trading partners. Another way countries earn money is by providing services to other countries. For example, a country could provide financial services, like banking and insurance, or it could provide tourism or entertainment. This can be a great way to earn money because it doesn't require investing in new industries or technologies. It simply requires providing a service that other countries are willing to pay for. Take, for example, Singapore. Singapore is a small country, but it has a strong economy because it provides a lot of services to other countries, including financial services and tourism. Many of the world's largest banks and insurance companies have operations in Singapore, and tourists from all over the world visit the country every year. This provides a steady stream of income for Singapore and helps to keep its economy strong. Finally, countries can also earn money by investing in other countries. When a country invests in another country, it's essentially lending money with the expectation that it will be paid back with interest. This can be a great way to earn money because the country is earning interest on its investment. Plus, it's helping the other country grow, which can lead to even more economic opportunities in the future. Take, for example, the United States. The US has invested heavily in countries around the world, including Japan, South Korea, and Taiwan. At the time, these were small, struggling countries, but the US saw an opportunity to help them grow while also earning some money in the process. Today, all three countries have strong economies and are major trading partners of the United States. Now, investing in other countries does carry some risk. There's always the possibility that the country won't be able to pay back its loans, but if the country is a good investment, the risks are usually worth it. So these are some of the main ways that countries make money. Some make money by innovating and growing their economies, while others make money by investing in other countries. Every country is different and there is no one-size-fits-all approach to making money, but these are some of the strategies that have worked well for some of the richest countries in the world. Now, it's important to remember that not all countries start out poor. Some countries are born rich and others are born poor. For example, the United States started out with a lot of money because it had a lot of resources. When the United States was first settled by Europeans, it was a very different place than it is today. It was a vast, undeveloped wilderness full of opportunity. The United States had plenty of land, water, and natural resources like timber and minerals. This made it an attractive place for settlers and businesses alike. In addition, the United States had a stable government and a strong legal system. This provided the foundation for a strong economy and helped attract investment from around the world. Finally, the United States had access to global markets thanks to its location on the Atlantic coast. The United States was ideally situated to trade with Europe and Asia. This gave American businesses a big advantage over their European and Asian counterparts and helped lay the foundation for the United States' economic dominance today. On the other hand, some countries are born poor because they don't have the same advantages. For example, many African countries were born poor because they didn't have access to global markets. When Europe colonized Africa, they did so for resources, not as a place to set up businesses. As a result, many African countries were cut off from the rest of the world and were unable to develop strong economies. In addition, many African countries were born poor because they didn't have stable governments or strong legal systems. This made it difficult for them to attract investment and made it hard for their economies to grow. Finally, many African countries were born poor because they didn't have many resources. Unlike the United States, Africa is not rich in natural resources. This made it harder for African countries to develop strong economies because they didn't have the raw materials to produce goods and services. So yes, some countries start out poor, but that doesn't mean they can't become rich. It simply means that they have to work harder to achieve their goals. They need to find ways to innovate and grow their economies, even if they don't have the same advantages as other countries. Many African countries are working hard to break the cycle of poverty and they're finding success. For example, Rwanda is one of the fastest growing economies in the world, and Ethiopia is home to some of the most innovative companies in Africa. So yes, some countries start out poor, but that doesn't mean they can't become rich. With hard work and determination, any country can achieve its economic goals. So that's how countries get rich. By following these steps, countries can put themselves on the path to prosperity, and while it takes time and effort, it's definitely possible. So which countries do you think will be the richest in the future? Let us know in the comments below, and remember, if you want to learn more about the world around you, subscribe for more updates.